Today, we're going to dive into a really fascinating case study. And it's not about making $1 million overnight or anything like that. No, it's about something way more important. And honestly, something people often forget about when it comes to investing: how to win by not losing.
So, let me ask you this. Imagine 100,000 ringgit just lands in your account. But there's a catch. It's not for a shopping spree. You have to invest it. What do? Do you go for those high-risk, high-reward tech stocks? Or maybe you play it super safe with something stable? Or, let's be honest, maybe you just freeze, totally overwhelmed by all the choices. Well, this exact challenge was actually put to the test.
And here are our protagonists. This is a group of students from the Faculty of Economics and Muhammad at University Science Islam Malaysia. Now, they weren't playing with real money, but the market, the pressure, oh yeah, the lessons were all very, very real. Their assignment was basically called the investment game. And the whole point wasn't just about trying to make a profit. It was all about trying to connect what you learn in a classroom with the chaotic, kind of unpredictable reality of the financial markets. Okay, so every game has rules, right? The students started off with a virtual 100,000 ringgit on the Bursa marketplace platform. But here's what's really important. 2 rules were put in place to force them to be disciplined. First, they couldn't put more than 20% of their cash into any single stock, which, forces you to diversify. And second, they could only buy stocks that were priced above 1 ringgit. These rules were pretty much designed to teach them good habits right from the very start. So with the rules all set, how did they even begin to approach the market? Well, they didn't just throw money at random stocks, that's for sure. They actually crafted a really careful game plan and put together a balanced portfolio, almost like they were building a team, with each asset having a specific role to play. And a really big principle guiding their choices was Sharia-compliant investing. So what is that? It's basically an ethical framework. It means their investments had to line up with Islamic finance rules. To put it simply, it's about avoiding companies involved in certain activities and steering clear of things like interest, a ton of uncertainty, or pure speculation. So let's meet the team they built. First up, they picked Tenaga Nasional, Malaysia's biggest power utility, as their steady defender, a reliable, low-risk player. For growth, they chose Inari Amertron, a semiconductor company, as their high-tech high flyer. Then they added Petronas Chemicals, calling it their economic wildcard because its value tends to move with the economy. And last but not least, to protect the whole portfolio, they brought in the Trade Plus Gold ETF as their golden shield, a classic move to hedge against a crazy market. With their team all picked out, it was finally time to play the game. But as any investor will tell you, even the absolute best plans can get thrown for a loop by the market's wild swings. So let's see how they handled the roller coaster. Here's a quick play-by-play of their journey. On October 27th, they made their first move, buying that gold ETF as their defensive shield. A couple weeks later, on November 10th, they brought in the rest of the team: Tenaga, Inari, and Petronas Chemicals. But by December, the market started getting choppy, and they made a smart strategic call to sell off some of their Petronas shares just to rebalance things. And then the game ended on New Year's Eve when they had to close out all their positions. So their plan was disciplined. Their execution was super thoughtful. But this is the stock market we're talking about. And as you probably guessed, there was a little twist in the story. And that twist really brings us to the most important lesson in this whole thing. Now, check out this quote from the students' own report. They wrote that a cut-loss strategy isn't a sign of failure, but actually a wise and necessary approach. This one idea is the absolute key to understanding what happened next. Okay, so here's where it all comes together: how they handled both the good and the bad. On one hand, their defensive pick, Tenaga Nasional, did exactly what they hoped it would. It earned them a small, stable profit. Perfect. But on the other hand, their high flyer, Inari Amertron, well, it took a nosedive. The price started to fall, and instead of just hoping and praying it would bounce back, they made a really disciplined decision to sell it, taking a loss. That was their cut-loss strategy in action, a strategic retreat to protect their money from getting wiped out. So, after all that planning, those strategic buys, and that super important strategic retreat, what was the final score? Did they end up in the black or in the red? A loss. They ended up losing 745 ringgit. And looking at that number on its own, you might think, well, they failed the challenge. But wait a second. Let's put that number into perspective. That 745 ringgit loss was on a 100,000 ringgit portfolio. That's a loss of just 0.75%. All of a sudden, that doesn't really look like a failure, does it? It looks like incredibly effective risk management. By cutting their losses on that one stock, they prevented a small problem from becoming a total disaster. And this brings us right back to that main idea. They won by not losing. The real prize, the most valuable profit they actually walked away with, well, it had nothing to do with money. So what did they learn? They learned that protecting your money through good risk management is way more important than just chasing huge profits. They proved that having a disciplined cut-loss strategy is your best shield. They saw with their own eyes that diversification actually works. Those small wins from gold and Tenaga helped soften the blow from their losses. And they learned that working as a team helps take the emotion out of financial decisions. Really, the big takeaway is that the first goal of investing isn't to get rich, it's just to stay in the game.
So I'll leave you with this question to think about. If the whole point of the game is to learn, is it possible to actually come out ahead, richer in wisdom, even when you end up with less money than you started with? Based on the story, the answer seems to be a huge yes.